Now, of course, this is going to be a controversial topic, and our final story of the day that I want to touch on before we get into our Q&A section of the day, ladies and gentlemen. We're going to continue talking about regulation because this is a hotly debated topic in our space. And on one side, I mean, you have two sides. On one side, you have advocates for regulation, and they insist that it is good for the industry, that it's good that we have clear rules in place, that the way is paved for mainstream adoption for consumers and businesses alike. And on the other side of the debate, you have individuals that warn that legal regimes will only serve to stifle innovation and entrench the legacy financial system that we currently have, and the cryptocurrency was originally designed to get us away from. That the legacy financial system is determined to protect its monopoly on the issuance of money, and that it will leave digital currency at a permanent disadvantage to fiat if this regulation is allowed to stand. So a good example that we can look at is where the correct regulatory framework can boost the blockchain's industry and their ability to innovate and even thrive when playing by the rules. So Switzerland has been forming a reputation for being a crypto-friendly nation. A recent milestone came when two institutions focused on providing banking services for crypto clients were granted licenses by the Swiss Financial Markets Supervisory Authority. You guys think we have convoluted names in America. Now, Switzerland's positive attitude toward digital assets undoubtedly contributed to Facebook's decision to base their not-for-profit Libra Association in their nation. Now, industry data that we have now coming out of Switzerland indicates that the blockchain industry is now booming, thanks to the, quote, open for business, end quote, approach, with one report suggesting that the value of Switzerland's top 50 blockchain companies doubled to a collective $41 billion in the first half of 2019 alone. Now, that's a positive example of how crypto industries, businesses, and the space can thrive when playing by the rules in a nation state that is crypto positive, that has set very clear guidelines. On the other hand, let's look at now an example of an overzealous regulatory approach, throwing up roadblocks in the way of development and growth in the space. The United States, with its global hegemony over the legacy banking system, has been especially tough with its crypto regulation, slamming the brakes on Libra for fear that it would undermine the dollar and even threaten the world economy. The hegemony that America has over the world economy. But I repeat myself, even faced with warnings that obstructing innovation will only lead to other countries with conflicting political interests taking the technological lead. The US-China trade war is a great example of this, and China's approach in developing their CBDC in the European Union's diverging approach from the United States in being warm to digital bank central bank digital assets, digital currencies. US regulators and politicians alike still remain standoffish at any prospects of legitimately exploring the potential benefits of this nascent technology in space. Now, you also have countries like India, for example, that have threatened to impose strict laws on those who deal in cryptocurrencies with a hardline stance that includes potential punishments as severe as a 10-year jail sentence and businesses being effectively cut off from banking services. And this has resulted in exchanges folding up and even moving to other jurisdictions. There's also warnings that India could suffer a, quote, brain drain as talented developers and entrepreneurs take their skills elsewhere, potentially costing the economy billions as the industry booms elsewhere and talent flees to warmer waters. The same scenario could face other countries where meddling regulation only serves to drive talent and innovation elsewhere across the world. Now, given the pros and cons of regulation as it concerns cryptocurrency, will it ever be possible for this budding industry to coexist comfortably alongside the traditional financial market and traditional financial institutions? And given this fragmented landscape that we seem to be working with some countries embracing digital currencies and others shunning them, will this technology go global? One might ask themselves. Now, regulation could have huge ramifications for two of crypto's unique selling features: anonymity and censorship resistance. Bitcoin and other cryptos that have followed are intended to be a decentralized, fully divorced from the legacy financial system that the infrastructure of the legacy financial system that, as we know, lacks transparency and is responsible for economic booms and busts, such as what we saw in the 2008 financial crisis. Now, bringing crypto into the world, into the fold of the world economy, would eliminate some of the freedoms that made it so appealing in the first place, one could argue, and open it up to counterparty risk in many of the spaces that are trying to avoid it. So there's also the there's also the matter of regulating crypto and blockchain startups, fundraising through ICO means, for example. And of course, as we know, the ICO craze, penny stock booms, man. Because the narrative was that ICOs are changing the way, the ICO model is changing the way that investments are carried out, and they'll change the world for the rest of time. And for all their flaws, of course, ICOs have enabled users of all budgets to contribute to the projects that they're passionate about. And any regulations that deem these as securities could completely shut out an investor class that either doesn't necessarily understand the underpinning technology or are threatened by it, and will only serve to mothball innovation at odds with their existing business motifs. By resting the responsibility on investors, this means that fast-moving innovation can generate investment and come to the market sooner by not getting tangled up in regulation and reporting requirements. So we can see the positive benefits of the ICO model in this. It gives an individual, it gives the retail investor direct exposure to the project that they want to invest in. On the other hand, in regards to ICOs, many would argue that the introduction of stringent regulations has the opportunity to introduce some vital investor protections in an industry rife with fraud and irresponsible funding models, which we're no stranger to here in cryptocurrency. Regulation could also be the much needed seal of approval for institutions currently hesitating from injecting billions of dollars worth of capital into the industry. Regulation of the crypto startup space could also increase the quality of new projects and be a largely positive impact on the space. Then, we of course have to talk about the issue of crypto scams. The industry has been around for a decade now, yet incidents of crypto scams are continuing to happen, with some arguing that this serves as proof that our space needs regulation in order to boost its legitimacy. Now, of course, others like myself argue for personal responsibility and self-regulation as the solution, an opportunity for the industry to mature and create its own checks and balances by getting the community to police and educate itself, and that this approach will strengthen everyone involved rather than foster complacency among market participants. Now, with so many diverging opinions on these topics, and there's a lot of them, and so much uncertainty over where the crypto and blockchain industry will be and will fit in from a regulatory standpoint in the coming years, intelligence from prominent exchange executives, central banks, governing bodies, and investors can be invaluable when it comes to assessing the macro perspective going into the next decade. Crypto Finance Conference being held in the Swiss resort of St. Moritz from January 15th to the 17th, 2020 is one up-and-coming event that aims to attempt to read the pulse of the industry's regulatory standing. Now, we are going to be following this conference, so stay tuned to our coverage of the event, as it's said to really set the mood for the industry going into the 2020s. And it's okay to not know the answers to these guys. It's okay to not have all the answers. I just want you guys to have these things on your radar and to form your opinions now and to do your own research before somebody tells you what to believe or you're forced to follow along with something that you may or may not believe. It's always better to be an educated, conscientious objector than an uneducated, reactionary objector. All right, so let me know your guys' thoughts and opinions. This is a complicated subject, and it would be arrogant of me to assume what is right or wrong about this topic. I, of course, have my opinions. I've talked about them before, but I try to bring the news to you as objectively as possible. Give you both sides of the story, both sides of the coin, unless we're talking about XRP. You get one coin. All right. Let me know your guys' thoughts in the comment section down below if you're watching this later or in the live.